Good afternoon all, and welcome to today's webinar where we are going to talk about the Nature Investment Standards Programme. Thank you for joining us. It's great to see so many of you here today. Before we start, let me do a little bit of housekeeping. Next slide, please. So to make you aware, this is a listen-only webinar that is being recorded. You can submit your questions to us via the Q&A function. We will hold a short Q&A session at the conclusions of the presentation. Simply click on the Q&A button in the side panel and post your questions. If you have any technical difficulties, that's also the place where you can ask questions to resolve your technical issues. We will send you a recording of this webinar. With that, there will be a feedback survey. So once you feedback and gives you feedback, you'll provide that link to this recording. This is also a CPD recognized webinar. So if you do want a certificate, you can request that via that feedback survey. Next slide, please. So again, good afternoon. We are very excited about the program that we have lined up for you today, and we are thrilled with the lineup of speakers. Before getting into the webinar, I want to give you a very brief overview of the structure of the webinar today and the role that BSI plays in supporting nature-based solutions. So I would like to start with the latter and provide a brief overview of what we at BSI do. For those of you that don't know, we are BSI, the UK's national standards body. We support the UK and industry in the creation of national standards across industries and sectors. We do this both nationally but also internationally, where we represent the UK within the international standards infrastructure in organisations such as ISO, CEN and CENELEC, the European standards bodies. Our core purpose and strategy revolves around sustainability, and we continuously strive to remain at the forefront of emerging areas within this field. This is so that we ensure that we do our part to contribute to a more sustainable, net zero and nature positive future. We have achieved quite a bit of success in this area, having played an instrumental role in a number of national and global initiatives. Whether this is the global work in us supporting the Integrity Council for the Voluntary Carbon Markets to produce the core carbon principles and drive integrity and offsetting, publishing the ISO net zero guidelines, or writing British standards for biodiversity, net gain and natural capital accounting. Both of these standards are now being adopted at an international level at ISO. The Nature Investment Standards Programme that we're going to talk about today is of the same ilk, and in the next hour and 45 minutes we will find out exactly what this programme will be aiming to achieve. This webinar will have presentations from key speakers, followed by a roundtable discussion about the programme, where we pose some of the questions and themes that you have submitted to us. We will discuss the vital role of nature in achieving net zero and promoting environmental recovery. To put this into a little bit of context, the recently published Environmental Improvement Plan 2023 outlines the blueprint for accomplishing ambitious environmental goals, and this includes halting and then reversing decline in nature. At the same time, the cross-government net zero growth plan also details government's approach to combating climate change. This includes the implementation of nature-based solutions that have a significant contribution to helping us reaching net zero. To support these ambitious plans, it is crucial to increase investment in nature and supporting suppliers of nature-based solutions to both scale up the delivery of projects with a full range of habitats and natural capital assets to allow us to transition to a nature-positive society. We are therefore delighted to be partnering with Defra and working with industry stakeholders and the devolved administrations to build this standards programme that will ultimately help build that confidence in nature markets and increase private sector investment into nature. The programme is specifically designed to overcome key barriers to investing in nature and the services it provides, unlocking the full potential of nature to maximise positive environmental outcomes. This includes establishing trust and confidence in high integrity markets that guard against the risk of greenwashing, enabling greater certainty and transparency for suppliers, buyers and investors in nature, and driving consistency and simplicity across the landscapes of codes and standards. Ultimately, this will help accelerate the progress to environmental goals such as reversing biodiversity loss and achieving net zero. My colleague George Sethia will provide a more comprehensive overview of the standards programme later. I now want to provide a brief introduction to our esteemed speakers for today's session, so you might want to flick to the next slide. We have Rohit Kaushik, Chief Economics Advisor at the National Farmers Union, where Rohit oversees a team of economists, statisticians and rural experts to develop and communicate the economic policy of the NFU. We've got Helen Avery, Director of Nature Programmes at GFI Hive at the Green Finance Institute. She leads the Institute's work on supporting the development of a pipeline of investable nature projects and building investor and buyer demand. George Sethia is BSI's head of consulting and is the program lead for this specific program. He currently leads on the industry engagement for this standards program. And for the panel session, we're joined by Helen Edmonton, Deputy Director of Green Finance at Defra, and Paul Cottington, Head of Conservation Investment at RSPB. Finally, we are truly honoured and delighted to now welcome our esteemed guest, Lord Benyon, Minister of State for Biosecurity, Marine and Rural Affairs at Defra. We are really pleased that Lord Benyon was able to find the time to join us today, and his presence is particularly meaningful due to his extensive experience in this field, having successfully run a business which includes farming, forestry and the management of rural and urban housing. So I am absolutely delighted to now welcome and hand over to Lord Benyon.
Thank you, Seb, and thank you for this opportunity. It's an incredibly important moment for us in government, the work we're doing with the BSI and trying to get the message across to all stakeholders, all interested parties in this key area where we think are huge opportunities. And my remarks will centre around what we're trying to achieve, working with BSI and others to bring integrity to this marketplace. So thank you for inviting me. It's a privilege to be addressing so many of you. I can see how widespread the interest for this subject is in this conference and other events that I'm talking at. It marks a really exciting time when in BSI's capable hands, we begin to design standards which will ensure that nature markets are high integrity. That means that we will deliver the benefits businesses are willing to pay for, whilst also delivering robust social and environmental outcomes. These include the recovery of our iconic landscapes and habitats, our precious marine and coastal areas, and the protection and restoration of our invaluable rivers, freshwater ecosystems, and wetlands. Nature markets are an important enabler in helping farmers and land managers to transition to nature-friendly farming. They attract private investment for projects that enhance the productive capacity of land and provide ecosystem services alongside food production. We listen to feedback. Measuring environmental benefits for sale is confusing, and the landscape is littered with schemes offering different systems for shaping outcomes for sale. We've heard that robust standards are needed to enable these markets and to ensure that they are, as I say, high integrity. But they must also be user-friendly, transparent, and drive positive and lasting change. BSI brings their years of experience and track record of working with a global community of experts using established protocols in a market-led process which has consensus building at its heart. I cannot underline enough the importance of the BSI Nature Investment Standards Programme, and I'm so pleased it is benefiting from strong involvement from our devolved government colleagues and a cross-section of our valued stakeholders across farming, nature conservation, water management, financial services, business, and so many other sectors. It's an agenda which promises to ingrain high integrity principles within nature markets. The words that I've heard too often when talking to different groups about this is that there's a wild west out there. Well, this work with BSI and Green Finance Institute, who I'm also a huge fan of, is really important in trying to end the use of that phrase, because we will be bringing, I don't want to keep repeating the words, but it is important, the high integrity nature of this work. So the premise of this work is simple. We need to work together to ensure that benefits from nature restoration are consistently and transparently measured. This will provide clarity and confidence for all market participants, to farmers and land managers, the sellers of the ecosystem services, if you like, to businesses and the buyers of ecosystem services, and to project developers, intermediaries, and investors who enable the transactions, and crucially as well, to regulators and government that want to ensure that these markets deliver significant environmental and social impact. Standards setting is just one aspect of effective and efficient markets. We recently published our Green Finance Strategy 2.0, and in this strategy, we announced our intention to consult later in this year on the steps and interventions needed to mobilize additional finance through high integrity voluntary markets and to protect against the risk of greenwashing. This work will build on the Nature Markets Framework, also published a few weeks ago, and the work of the BSI Nature Investment Standards Programme. So alongside standards, we also need suitable assurance. This is about ensuring credits or units sold are from properly designed nature projects. Common international standards and principles, for example, building international consensus on voluntary markets. Effective market governance and infrastructure to ensure that the market operates in a transparent way and geared towards lasting environmental change. And finally, to clarify regulatory responsibilities. We intend to consult on further steps and interventions for clarifying regulatory responsibilities as part of the wider consultation later this year. Regulations should be proportionate and introduced where there is clear evidence that doing so would improve the integrity and scale of the UK market. And it's crucial also that regulation shouldn't be disproportionate and that will freeze out the kind of investment we want to see. So getting that balance absolutely right is crucial to us. And I'm so grateful for the involvement of, as I say, my devolved colleagues, so that we are aligned in our efforts to develop this framework right across the UK. And by working together, we can, as far as is possible, ensure that these standards set out what looks good, or perhaps what I should say, what good looks like, no matter where you are in the United Kingdom. And international schemes are growing to meet increasing demand, including initiatives such as the Integrity Council for Voluntary Carbon Markets. Beyond carbon, I recently joined discussions at the Nature Action event at Lancaster House, followed by a reception with His Majesty the King, which highlighted the need for increased collaboration and action to scale credit markets and ensure that they deliver just and equitable benefits for the stewards of biodiversity right around the world. The government is committed to fostering growth and integrity in these markets to help support coherence internationally and to unlock additional investment in nature to drive ambition domestically and globally. Last December, I attended the Convention on Biological Diversity in Montreal, where the world came together and took on a clear mission to make this the decade that we put nature on the road to recovery. This included the landmark Global Biodiversity Framework, which also recognized the importance of biodiversity credits and markets. Through the BSI initiative, the UK is building on best practice and placing itself in the forefront of international efforts to build high integrity nature markets. And this initiative builds on developments made internationally and will take account of the approaching publications launched under the UK's COP26 presidency. So I look forward to working continually in earnest and with everyone's involvement and buy-in on what I believe is essential to assure our success, both in the regulatory and in trying to make sure that we're bringing that level of integrity, but also that we are delivering on the ground real additionality. So my thanks to BSI, to Seb, to all of you for hosting this event. And I hope everyone comes out of it excited about what the future holds for nature markets. Thank you very much.
Brilliant. Thank you so much, Lord Benyon, for that insight and overview. That was fascinating. I know you are very busy and we are really appreciative of your time, but I was wondering if I could ask you a few questions before you leave us.
Sure.
Brilliant. You talk a lot about integrity there. So what do you see as the risks posed by schemes which offer to measure and sell benefits that don't really demonstrate high integrity?
Well, I think that the most important point is one of credibility. If there are repeated stories in the press of where investors have paid for something that doesn't happen, or people have done work that has not received the support that it was claimed to have received, then we have got a problem. And so I think that this is so vital. We have to have schemes that demonstrate high integrity, and that leads, not doing so leads to a number of risks. Initially, it leads to confusion for land managers who could design projects which don't have verifiable outcomes, and lack the confidence for buyers who might not be paying for outcomes that are lasting. We send mixed messages to the market of what good looks like, then we will pay a price because there will be uncertainty, which will be exploited by some, and the virtuous will feel eased out. And ultimately, the risk that these schemes open the door for others to make similar claims and greenwashing is, of course, in the forefront of our mind. The longer term risks are that our environmental goals are not met, and that is such an important point. We have created such a very difficult ambition, which is to reverse the multi-decadal decline of species by 2030. That's basically 6 years away, and we want to see a massive investment. We are not going to be able to deliver the kind of investment through taxpayers' money, although we are putting billions into changing the way farming operates, changing the way we support people to make the right decisions in our countryside, driving to net zero, but we can only do this in partnership with the private sector. This is how to do it.
Brilliant. And taking that sort of a step further, if we look at this sort of holistically, what would you say is important for Defra?
You'll hear from Helen Edmondson, who leads on this later. She will explain perhaps in more detail, but this programme is of vital importance to our work on nature markets. We want to have a process for co-creating the design of a market that thrives while ensuring high levels of integrity and which lead to real additional and lasting environmental outcomes. We want private investors to feel informed and confident about the markets they're investing in. And the backdrop is our goal to raise at least £500 million in private finance to support nature's recovery every year by 2027, and rising to more than £1 billion a year by 2030. And we also want Britain to be the place where investors come to invest, but also other countries come to see how to do it. And if we over-regulate and if we too constrain what we're trying to do, then we will not achieve what we want to do. But if we under-regulate and allow too free flow of market forces, then we will not get the high integrity from which credibility will flow.
Brilliant. No, absolutely. That balance is a tough balance, but that's what we're exactly looking at. So my final question then, what do you say about the calls from some stakeholders that say that standards are needed as soon as possible?
They're right, and we agree that this is a crucial time and a critical matter. So that's why we've chosen to work with the BSI as the UK standards body, with time-tested protocols in place to develop standards at pace, developed by a committee, improved by consultation, and agreed on the basis of full consensus. Absolutely crucial. This is not something that's being done to the investor community, to the farm and land manager community. It's being done with them. It sounds like a cliche, but it really is. This is the most collaborative action that I think I've been involved with in over a decade in government. So I think this is really important, really good news. And it's just part of our work to catalyse nature markets. Our wider ambition, as set out in our green finance strategy, outlines a number of important strands, and we're learning all the time about the need to scale up these markets and how they evolve. We're taking stock of lessons such as from our current programs, an example of which is our £10 million Nature Environment Investment Readiness Fund, which is sort of kick-starting projects. It's showing what can be achieved, and then the private sector will pick this up. This fund's nature projects developing their financial models, and we're also looking at how else we can support the journey to investments such as the Big Nature Impact Fund, which is a public-private blended fund to provide capital finance for revenue generating nature projects. So there is a lot happening in this space. Government has to lead, but it also has to collaborate and it has to work with people, and that's why where BSI is so important, and collaboration with a variety of different organizations, institutions. But we want investors to be talking to government, to be talking to the recipients of this fund to make sure that flow. And the strategy, green finance strategy, is a really important document, but the nature markets framework says exactly how the money should flow and the kind of things that we're doing with you to make sure that this happens.
Fantastic. That's a great note to end on. Lord Benyon, it's been an absolute pleasure having you join us today, and we thank you for sharing your insights with us. We're truly grateful that you found the time to join this discussion. So once again, thank you very much for your time, and thank you very much for being with us. It's much appreciated. So we will now have 3 short presentations from our guest speakers, and I would like to welcome our first speaker, George Sethia. George is BSI's Head of Consulting and Program Lead for this program. George, can I ask you to turn on your camera? Thank you. I'll hand over to you.
Thank you, Seb. So over the next few minutes, I'm just going to take you through a high-level overview of the BSI Standards Programme. So if you can go to the next slide, please. And the next one. So firstly, I just wanted to explain and start with the different types of standards that we're talking about here. So standards set out good practices for markets and provide the evidence against which claims can be made. And these claims need to be made based on measurable and verified benefits. So ultimately, these are the standards that provide the assurances for suppliers and buyers that what is traded represents real outcomes. So in the UK, we've tended to refer to these as codes so far, and there are a number of emerging codes coming in to support the development of newer markets. And it is a little confusing, as there is no clear definition at the moment as to what exactly a code is or what it should cover. But it's becoming even more so as the range of ecosystem services markets expand and become more complex. And there needs to be some kind of consistency, coordination and alignment that could be in the form of principles, minimum requirements and guidance. These kind of standards are really required in order to drive consistency and looking across markets so that we're focusing on the natural capital and the multiple benefits that nature can bring. And the other thing, of course, we've talked about is that with the number of codes, there are varying approaches and different quality levels emerging across codes. And high integrity now is becoming the key issue. As we've heard, this is the biggest risk at the moment for these markets. So really, to sum up what our programme is about, it's about exploring the standards that will drive robust, high integrity and scalable markets. Can you go to the next slide, please? So we are positioning this through a standards framework that will govern nature markets for the UK. So at the top here, you can see on the slide, we have the overarching integrity principles, and these will set out the core needs for high integrity, which should be reflected throughout all codes and standards. Now, we know a lot of thinking's been going on here, but however, there's nothing really consensus-based that exists at the moment that can be used to drive this. So we're currently exploring a standard that would do this and fill this gap. And given the importance of this and the fact that everything flows from these principles, we want to accelerate the development of this overarching standard. And we're currently working up a set of initial proposed principles They're being informed by policy and lots of recent thinking across the UK and globally. But we're also doing our own engagement and building that into these principles. But I guess if these principles, if you like, set out the outcomes, these then need to be operationalized. And we're going to do that through a set of requirements against which codes can demonstrate alignment to the principles. And for these to work, for these core requirements to work, they need to go into more specific detail, appropriate for natural assets or ecosystem services potentially. But really importantly, they need to support the delivery of multiple benefits and drive consistency across markets. So we're really thinking about how we can integrate and provide other standards that provide supporting cross-cutting good practice. And these could include things like natural capital management, project delivery, data standards, etc., would be integrated into those requirements. And we are also looking at this level at things like biocide integrity, which we've heard is critical to cover. So these requirements, if you like, would form the approved methods or routes that can be used to demonstrate alignment to these principles. And I guess if you think of it as a set of benchmarks that govern the landscape of nature markets and against which individual codes themselves can be assessed as being sufficiently robust. We are conscious that for this to work in practice, there needs to be the right governance mechanisms, though, that sit around our standards. So we are definitely exploring this as well and linking up with other policy work that's ongoing. And finally, to sort of the third layer of this diagram, we are also reviewing the landscape of codes across the UK markets themselves and exploring whether there's a need to support or drive a new code in an area where there's appropriate demand and evidence to warrant this. So can you go to the next slide, please? Yeah, so we just wanted to highlight here that engagement is an absolute top priority for us at the moment, how important this is. And we are making sure, an absolute critical thing is we're making sure that we are co-designing our standards framework with the market. So look, you can see the numbers on the slides. We have already spoken to a large number of stakeholders and factored in their perspectives and needs. And this is from across UK markets, but we've also been speaking to stakeholders globally from the voluntary carbon markets and emerging biodiversity markets and factoring in those lessons learned into our programme. And we're going to continue to run engagement events over the coming months. A couple of other things to note at the bottom. For these types of programs at BSI, we always set up an advisory board that's formed from industry experts who will provide guidance and review any recommendations that we make. And the other thing is that we will be providing regular updates to our website on key developments. So, for example, we are going to make available pretty soon some more information around the overarching principles that we're recommending, and we really invite people to go on and provide comments. And on that note, I should mention that if anyone here hasn't already been engaged and is keen to do so, please reach out to us. You can do so via the website, and the team would be very happy to set something up. Next slide, please. So I just wanted to do a very quick overview of BSI's standards development process. So for these standards, the first thing is that we are proposing that we follow one of our more agile standards development processes, which means a fast track process and gives us more flexibility to adapt standards once they're in place. But the main thing, I won't go through the diagram, you can see the steps on the screen, but the main thing I really wanted to highlight is that all our standards go through consensus. They are developed through consensus, and that means we form a group of industry experts who oversee the standard, oversee the development of the standard, and all our standards, no matter what process we go out for public consultation, and comments are taken into account. Next slide, please. So a couple of things that we did want to highlight as really important considerations for our work, and these are based on some of the things that we've heard so far. First and foremost, really, this is a framework for the UK, and therefore we are working with Defra, but also the devolved administrations and stakeholders from across all the 4 home nations to build our framework. And we're making sure that our principles and standards that we're developing will address the key concerns and policies from across the UK. A really important focus for us is how we balance, on the one hand, ensuring high integrity, which is critical, of course, but also not defining our requirements and standards so stringently that the markets will struggle to continue to operate and grow. So it's something we've been really looking at, and a really key consideration is how we strike that right balance in our standards and make sure we set the minimums to protect against the risk of greenwashing, but allow these markets to grow and function. And it leads on to the next point around applicability, because it's really relevant when we look at how we apply and who we apply these standards to. So we are recognizing that there are different players, particularly when it comes to smaller landowners and when we look at things like insetting markets. So we're working really carefully through the applicability and how we will apply these standards in practice. As I mentioned before, it's really key that our standards support a systematic approach. And we really want to make sure that we're focusing on natural capital first. So encouraging projects that look across the full range of benefits, and we cannot drive ecosystem services in isolation. This is key, and our framework needs to support that approach. And along with that, another one is how we can support connectivity across landowners and aggregation of nature projects to create scale, which is something that we've really heard from the supply side in particular. The fifth one there, I mean, it's so important. We absolutely cannot create additional complexity and cost through our standards more than is absolutely required to mitigate the key risk of greenwashing, as we've discussed. I mean, one of our key objectives here is to simplify the market. So we have to structure our standards framework in a way that allows for simplicity as much as possible. Another really key consideration for us. And finally, we know time is critical. We've heard it a lot. We've heard many people say we need to have something in place right now to mitigate the risks that we're seeing. So that leads me on to my final slide, which is around timelines. So look, I won't dwell on this, but I did want to stress that although we have a 3-year program, you can see on the slide, that really doesn't mean that we will not have anything in place before 3 years' time. So as I said, we are going to propose to use our fast track standards process, and these typically take less than a year to develop standards, and we have the opportunity to accelerate more urgent priorities. So something we're doing at the moment is, in our discovery, is looking at the phasing and the priorities that we will develop. So that's all from me. Thank you very much for allowing me the time to take you through that. Yeah, over to you, Seb.
Brilliant. Thank you very much, George. That was very interesting. Probably quite a few questions, but I'll keep them to the round table and probably do a bit more of a deep dive in some of those elements you mentioned there. I was wondering if I could invite Helen Avery, Director of Nature Programs and GFI Hive, to turn on your camera, and I'll hand over to you now.
Hi, Seb. Thanks very much, and good afternoon, everyone. So I'm just going to talk you through some of the perspective for investors and buyers, and specifically what is their interest in that nature markets and what is it that they're looking for. So this might be a sort of a bit of a back to basics, but hopefully I can also touch on some of the standards that they expect to see in that rigor. So next slide, please. And the next one. Thanks. So just a reminder, as we're thinking about transitioning our economy to one that values and invests in nature, we see it through that behavioural change coming through 2 lenses. One is on risk and the other is an opportunity. And then within opportunity, nature markets play a really, really key role. And there are sort of these 3 legs to the stool, as I call them, that need to happen concurrently for our nature markets to be delivered. One is the supply side, obviously a pipeline of investable projects that deliver nature positive outcomes and restoration. And that obviously we're seeing tackled through ferns in Scotland and the NERF in England. It's now over 100 projects under development across the UK. Then there is this demand side. We need corporate buyers, and this is really important and something I think we don't focus on enough. We need corporate buyers to actually purchase those ecosystem services to create that revenue stream ultimately. And then we need a financial sector that's committed to providing the upfront investment and lending that many of these projects need. And then of course we need the market infrastructure, so a supportive policy and regulatory environment that builds confidence in nature markets and drives both the supply and the demand, and all of these three have to happen at the same time. So next slide, please. So I thought I'd just walk through, what are buyers looking for? It's a really tough question to answer because every buyer is looking for something different, especially if you look at compliance markets versus voluntary markets. But we've tried to sort of sum up here roughly, whether it's high, low or medium need among different, what buyers tend to sort of share. So in voluntary markets, obviously we see marketing, alignment with values. They're looking for offsets, typically in carbon markets, but also it's a bit of a sort of marketing and CSR play. That's not the same for compliance market, for example, where companies have to buy units or credits. They're looking for relevance to their business use, so that would be, they need to offset some carbon, and that's obviously they need to comply with regulation in the compliance markets. They're thinking about time horizon. They're obviously thinking about pricing, and maybe we'll touch on this later about, am I paying over? Am I paying under? What is it I'm paying? They're really thinking about delivery. Like, what is the risk to them of this not being delivered? That is high, whether you're in a compliance market or voluntary market, and this is really where the role of standards can come in. So they're thinking about, what do I understand unavoidable losses? Am I understanding that what is the delivery risk? What is the team like that's going to be delivering? How are they going to be delivering? What are the community aspects as well? And then reputational assurance is really coming up this agenda. One, am I actually going to be buying something that I'm going to be accused of greenwash later, or am I going to be buying something that is going to impact local communities and I'm going to be in various newspapers down the line? So this really fear of greenwashing and not being accused of doing the right thing can even override some of those other priorities. So next slide, please. And this is where codes actually really give a lot of confidence to buyers, because they can provide confidence in delivery of environmental outcomes, and they can reduce or actually get rid of entirely some of that reputational damage, which of course ensures that that revenue stream is created, and it also strengthens the contracts between the buyer and the seller, knowing that there's a code in their place. So these 5 are just sort of taken from what the Woodland Carbon Code and Peatland Carbon Code share as sort of really underlying codes, and that's robust science, it's discussions of permanence, clarity around additionality, that independent validation verification, and also transparency. So they're just such an important part of this 3-legged stool if we want to create that demand side. Next slide, please. And I'll just skim through this, but it's just really to give you an illustrative example of how buyers are different. So for example, on the project on the left, it was a brewery. It was looking for to offset some of its carbon footprint. What it was looking for particularly was robust standards. That's why it went with the project that was signed up with the Peatland Carbon Code. It was looking for co-benefits in water. Biodiversity net gain, the buyer was obviously a local developer, in this instance looking to meet its BNG compliance requirements, and it wanted to work with a reliable seller and also start to dip a toe in and develop its capacity for future BNG. In the case of Entrade, it was about reducing cost to the company. So that when they were working with farmers to reduce nitrate runoff, and also again, that's sort of dipping the toe in as it starts to think about other work in MBS. And then the why that I think we're all familiar with, there are a range of buyer motivations for that deal, but primarily it was driven by natural flood management. So what buyers are looking for can really, really vary. But hopefully that gives you a bit of a flavour, but underlying it, it's always going to be they're looking at the risk, they're looking at the delivery and their reputation. Next slide, please. Investors, I must give credit to Dan Hurd for the following slides because he has walked through this several times, I know, with the NERF projects. But investors, like buyers, are all completely different. The main thing is they'll be looking at what meets their basic investment or fund criteria. Is it the right sector? Is it the size they're looking for? Is it the impact they're looking for? Does it align with whether they're a private equity or a bank looking to issue debt, for example, or they're a fund looking for perhaps buying stock? they'll be looking at their risk, and this is where standards obviously come in. It is the business of financial institutions to preserve capital and ultimately make additional money, enhance that capital. That is their job. So they want to make sure that whatever it is they're going to be investing in is going to deliver, and they'll be thinking about the strength of the underlying contracts between the buyer and the seller. They're obviously looking for returns, and that will vary, and we have a next slide that sort of show the varying returns that people are looking for. In some cases, they're looking to be able to control or influence the underlying project, not always, but often. And again, it's that reputational assurance. We're seeing sort of people being really terrified about greenwashing, and then also about impacts on communities. It's not just environmental outcomes, it's also that broader impact on society as well. Next slide, please. So quite a busy slide, but this is essentially showing you all the different investor types and what they're looking for. So on the left-hand side, we have sort of grant funding, where it's, you know, looking for, it's not necessarily looking for a revenue stream in a project. It might be putting in naught to £200,000 perhaps, and they're not really looking for returns. And then we move along, and this is kind of the column that we're seeing a lot of in the moment in UK nature markets, and those patient, flexible loans. They tend to be done by high net worth individuals coming together, perhaps working through a bank, impact investors, charitable trusts, some retail we've seen perhaps with the Triodos and Trees for Life. And ultimately, they're sort of 0 to 2 million that they'll be putting in, and looking for anything from 0 to 9%. That's what we're hearing. And then as we move along, you've got venture capital, you've got commercial equity and debt are going to be looking for commercial returns. So sometimes the double digits is what you can expect there, and much, much bigger ticket sizes. And again, what everyone is looking for, other than perhaps this grant column, is that low risk and the return that meets their return requirement, and a reputational assurance. The next slide, please. So this is just to drill down even further. The investment requirements specifically for those payments for ecosystem service models that we're seeing out there at the moment is, one, they want a confidence in the revenue stream. They want to know who are the buyers. This is from an investor's perspective. Who are the underlying buyers? What are those contract terms, and what is the strength of that contract? So again, sort of how has the buyer worked with the seller to ensure that delivery is in line with what they're looking for? And who are the landowners, and what are their contract terms? And are the payments fixed, or are they performance-based? These are all questions that investors need to have answered. And then that confidence in the delivery plan. Who's putting the deal together? What is the track record? And this is where we start to explore governance. What governance structure is in place? Is the business plan achievable? How are the risks being mitigated? That's absolutely key. And this is, again, where some of these standards can really, really play a role. So finally, just to wrap up here on the next slide, just a bit of a summary, and that is buyer investor types are very different, but there are common requirements. One is robust environmental outcomes, science-based, tackling additionality, permanence. People want to know about double counting. Is that a risk for me? Are the stacking and bundling, if it's happening, is that actually what's aligned with, is that eligible? Project governance, what's the strength of those contracts and how is it being managed? And then pricing guidance, which I won't touch on now, but that really is sort of transparency around the prices being paid, which we don't really have at the moment. So I'll leave it there, and back to you, Seb. Thanks.
Brilliant, thank you very much again, Helen. There's so much information there. I'm keen to do a deep dive in some of those. Can I now ask our final speaker to come on, Rohit Kaushis. He's the Chief Economics Advisor at the National Farmers Union. Can I hand over to you here, Rohit?
That's great, thanks Seb, and great to be involved in this webinar and to be part of the BSI work. It's a really important piece of work, and I'll spend the next 10 minutes or so explaining why so from a supplier's perspective. And it's interesting to kind of see that actually over the last 2 years, we've probably gone from a place where we at the NFU, particularly looking from a farmer's perspective, felt like the supplier side of this wasn't really being looked at too closely. There was a lot of focus on the demand side of how these markets are going to be established and how you get a demand for nature-based solutions, but not so much about actually how do you make these markets work for suppliers. And so it's brilliant to kind of see the conversation go on and for that emphasis to be there. And given that farmers manage around about 70% of land in the UK, if we want to scale up investment in nature, then farming needs to be a key part of that solution. And there's some great opportunities there as well. So next slide, please. And one more, thanks. Thank you. So I'll start with a bit of context. So if we look at it and start exploring this opportunity from a farming perspective, farming is going through one of the most significant transitions in its history. The agricultural transition plan, and particularly the phase out of BPS, is going to drive huge structural change in the agricultural sector. And we see that playing through now. And it's at a time when these alternative environmental markets are developing. And so therefore, from our members, we're seeing a growing interest in the opportunities that these markets present for farmers to produce food and deliver for the environment through environmental services. But one thing that's key here is that environmental markets, and when we talk about them, generally from a farming perspective, we're thinking about carbon, biodiversity and water at this stage. And one thing we have to sometimes remind some of our members about when we get queries about this is that these markets are very much in their early stages of development, but they're showing growing momentum in terms of their maturity and the amount of solutions that are coming online. But the challenge sometimes is that the media or the political rhetoric almost give the impression that these markets are a lot further on than they actually are in terms of their maturity, whereas it does actually in practice feel like more of a speculative endeavour, besides a few kind of good examples out there that are more well established, such as the Woodland Carbon Code and ever more so the peatland code. Now, if structured correctly, these markets could provide an attractive source of diversified income for agricultural businesses, but crucially, if not, they carry significant risks with intergenerational implications for farmers. And that's because the length of these agreements are generally expected to be multi-decade agreements. You know, the nature and the kind of things you're trying to deliver can't be achieved in a year or in a few years. You know, these are going to be long-term agreements, and that's a real fundamental shift in the way farmers will engage in land management and agreements on farm with some really long-term commitments. So in response to trying to understand how we make these markets work, we at the NFU last summer kind of published our 5 key principles, which if met could help shape the development of environmental markets that are suitable for the agricultural sector to engage in. Next slide, please. And these are our 5 key principles. What I'll do is I'll effectively talk through what these principles are, some of the risks that they're trying to address, some of the opportunities, and critically, actually, how does the BSI work that we're involved in now address some of some of these issues or these challenges that we've identified. Next slide, please. So if we look at principle 1, it effectively says that environmental markets must work alongside the domestic production of food, energy and fibre. And this really addresses one of the key concerns from farmers, that there could be a real tension between trying to deliver nature-based solutions alongside food production. And that could lead to issues such as leakage, for example, where you see large-scale displacement of food production due to land-sparing activities. In a sense, this principle was an acknowledgement of the fact that a lot of the emphasis at the moment has been on land-sparing interventions. So if you think about woodland creation, peatland restoration, sometimes it's difficult to see how those at scale will work within productive farming systems. And one thing we're looking to do is understand how can we have more land sharing activities that can be integrated into productive food systems, play a role in nature delivery. So what is the role of hedgerows, infield trees, agroforestry, soil carbon and soil benefits, and water management? And we need to see more codes developed in that space. And if we can achieve that, then these practices can complement and actually improve the sustainability of food production systems and be incorporated into farming practices. And these could provide a really powerful source of diversified income to provide financial resilience for farming enterprises and enable greater investment into the broader farming system, and that's effectively where the key opportunity lies from an agricultural context. Next slide, please. So if we move on to principle 2, one of the key things we hear from our members is that public policy and government initiatives must support the development of private markets. In effect, what we hear from farmers quite consistently is that the risk is that fast evolving environmental policy is making this a very confusing place to engage in. So how will farmers meet their commitments for supply chain and for their regulatory commitments alongside engaging in environmental markets and being able to deliver nature-based solutions or selling them in environmental markets? And the risk really is that what we need is a multifunctional landscape approach, and this is something George touched on in his presentation. And we can't have a singular focus on one environmental outcome such as carbon and have that really strong kind of carbon lens approach to this, because farming has to deliver food, it has to deliver for biodiversity, it has to deliver for water, and deliver towards achieving our net zero goals. And therefore, any standards that are produced, and this will probably have to feed in some of the BSI principles, will have to take that balanced approach in terms of ensuring there's no significant harm to the broader crucial factors that land delivers. And there is going to be a key role, and this is why some of the ask at the time was that government can play a key role in helping to shape environmental markets. But one of the other key asks here was around stacking and blending. So how do we combine the selling of different ecosystem services so that farmers can realize the full value that's being generated from those nature-based solutions? And what we find is that actually the economics of this often doesn't stack up at a farm level unless you can stack and blend revenues from different sources. So it'll be a really important part of the BSI work to explore the concepts of additionality and look at actually how do we make sure that the different codes are speaking to each other so farmers can maximize their returns from delivering for nature and the environment. Next slide, please. And principle 3 is that environmental markets require clear rules and standards to allow farmers and buyers to participate with confidence. So come on, BSI, this is the prime example of Defra and BSI really responding to kind of the industry call here, because and this is one thing which has been flagged as one of the key issues everyone faces in terms of undermining confidence. So we hear this from all the stakeholders across the board, whether that's banks, supply chain, farmers on the ground, that technical standards are fast evolving. There's a huge amount of complexity around how environmental outcomes can be reliably measured and accounted for. And the real risk here is that schemes can be might not stand the test of time. So farmers are saying that they're being approached today by different project developers saying, oh, why don't you sell us carbon credits or biodiversity credits or the like? And farmers are coming to the NFU asking, well, what does good look like? How do I know this is a good scheme? And how will it stand the test of time? So as our scientific understanding and our social expectations of what good looks like in terms of nature delivery evolve, how do we ensure that farmers and anyone involved in these projects aren't accused of greenwashing or kind of mis-selling, especially when they'll be committed to long-term project timelines, you know, over multiple decades, as I mentioned. So this standards piece really is key and central to driving that confidence, and primarily because with the high cost landscape of UK land management compared to kind of global benchmarks, where the UK is going to compete in terms of nature delivery is on high integrity. We're never going to be able to compete on low cost offsets or credits globally because our inputs are too high in terms of costs. Where we are going to compete is on having really high integrity markets where there's a lot of faith, and that's something we hear quite a lot from investors, that capital is flowing back into the UK looking for that more sound investment where they can be comfortable that it will stand the test of time and they won't be accused of greenwashing. And it is the same case for farmers. They want to take long-term decisions with confidence if that's what they're going to be looking to do. Next slide, please. Principle 4 is that markets should be accessible across a range of farm sizes, tenures, and business structures And I think this is something that's already been mentioned in previous presentations. I know George mentioned it about the importance of aggregation. So the issue at the moment is that a lot of these markets require scale. Economies of scale are a huge factor because of just the high transaction costs, and it's easier to deal with one person with a large estate and have kind of an intervention on that farm or that estate, and you can deal with that one entity and minimize your counterparty risk. But what this actually does is rule out the majority of farmland. You know, the majority of farmland will have small and medium-sized farms on it and tenanted land, which at the moment aren't really able to access these markets because of those high costs to entry and limitations in terms of scalability. And there's a real issue here that landowners might seek to take tenanted land out of the tenanted market in order to access environmental markets because of issues around tax treatments of land, and that's something we don't want to see because the tenanted sector plays such an important role in food production and in the agricultural sector. So what we want to see is effective aggregation of small farm projects, and this is something we're going to have to explore in these standards to understand how aggregation can be supported in order to scale up interventions, and how farmer collaboration can be developed. What does good look like? What does best practice look like? And how risk and revenue sharing agreements may look like for tenants and landlords. Again, this should be a feature because this will really be a nod to some of the just transition pieces in this, and how do you ensure this is part of an inclusive transition to a nature positive environment. Next slide, please. And principle 5 is that farmers must be fairly rewarded for the delivery of environmental goods. The key thing here, I think Helen talked a lot about, you know, it's really difficult right now to understand what's the price of traded credits, what is a good price, what's a market competitive price. And the risk for the farmer is that you get in these projects, you have high front-loaded costs with back-loaded revenues in the future, and that creates a cash flow risk because farmers are stumping up a huge amount of money up front. Counterparty risk, what happens if your buyer defaults and doesn't pay? And how do farmers ensure they're going to receive a fair proportion of project revenues and a fair share of the added value? What we wouldn't want to see is a replication of sometimes what we see in the food supply chain, where farmers as price takers have lower bargaining power and therefore end up with not a meaningful long-term incentive. And if these are multi-decade agreements, it's going to have to be more of a collaborative approach between the buyer and the seller rather than a transactional approach, because there's going to be risks over time that will need to be equitably shared, such as what happens if you're getting huge amounts of inflation unexpectedly, as we've seen in the past year. That really flipped the economics of a project. You know, should the payment rate be inflation linked? Should there be more of an onus on the buyer to share some of the risk of those project costs rather than loading it all on the farmer? But if we can get this right and we can get the transparency right around all of this, and again, these are some of the areas which are in scope of these BSI standards, and hopefully play through into the end product. This could really help provide a really positive operating space for farmers to engage in. And last slide, please. So just to finish up, these are our 5 key principles, and just to bear in mind, this is something we pulled together with after extensive engagement with farmers, farmer cluster groups that are looking to collaborate and aggregate, and with stakeholders within these markets, effectively, that are trying to identify solutions. And one thing that's been a really positive step, actually, is this BSI work has come about at time. It's exactly what we kind of asked for when these principles were established, that we do need to really get a grip of how do we address these five key challenging areas to create markets that farmers can engage in. And all the research and the surveys that the NFU do show there's a huge appetite amongst farmers out there to engage in these markets if they're structured in a way that can work alongside food production. Thank you.
Thank you.
I'm happy to head back to you. Thanks.
Thank you very much, Rory. That was very interesting. Keen to sort of do a deep dive in some of that. The things that jumped out really was you really sketched a really good picture there of the intergenerational impacts including in a vast evolving environment of policy landscape combined with possible inflation. That sounds very interesting, interesting sort of fundamentals there. But I am keen now to sort of move over to our panel discussion. So I was wondering if we can move to the next slide. Yep, there we are. And can I ask all panelists to turn on their camera? Oh, brilliant. Great to see everyone there. What's this? Is Paul joining us as well? Paul Cottingham. So we should be joined by two additional speakers. I can't see Paul yet, but I'm delighted to invite both of them to this roundtable discussion. We've got Helen Edmondson, Deputy Director for Green Finance at Defra. Wondering, Helen, if you could do a brief introduction of you are and do a bit of context setting for us.
Yes. Hello, everybody. I'm Helen Edmondson, and as Seb said, I am the Deputy Director for Green Finance here in Defra. Lord Benyon actually introduced me earlier, which was very nice. So just as a bit of context in terms of what I cover and why I'm here today. So I do look after Defra's interests in green finance, and that basically falls into two buckets. One is around the greening finance agenda. So we work very closely across government with our colleagues in Treasury, Department for Business, and the newly formed DESNZ, Department for Energy, Security and Net Zero, really about putting nature and climate resilience at the heart of financial sector decision making. And for those of you that haven't read it already, the Green Finance Strategy that was published back in March, you will see all of the efforts that we are putting in place to move towards a net zero, climate resilient, nature positive economy, and seeing those things really in the round, sustainability at large. So that's on the greening finance side, but then we also look at the financing green. So how do you really get that money flowing to nature's recovery? Lord Benyon mentioned that target to raise over £1 billion every year into nature's recovery by 2030. And helpfully, actually, a lot of what has come before feel like hopefully we are working on the areas that you all want us to work on. So lots of stuff around that market governance piece that Helen touched on, and also Rohit as well, and mentioned the nature markets framework that we also published in March. That starts to set a little bit of those rules of the game, how we want to see these markets evolve. Also supporting that project innovation and project delivery. What we hear is, well, where are the projects? And Helen, you mentioned our NERF programme, our Natural Environment Investment Readiness Fund. There's 86 projects already across England. So working with Scotland on their funds as well. How we really get those projects and that innovation happening on the ground. And then also the seed funding that we're providing into something called the Big Nature Impact Fund. So some risk capital to get those projects that are still at that very early stage really into the market. So a sort of full end-to-end financing approach for how we can get that money flowing. So I'm very happy to be here and to talk about standards, which is the key component into all of what I've just set out.
Brilliant. Well, we're delighted to have you here, and actually it might be good to take some of those programs and link them in our sort of notes afterwards when we follow up. We've also been joined by Paul, Head of Conservation Investment at the RSPB. So Paul, wondering if you can do a brief introduction and a bit of context setting.
I can indeed, and now I found out what buttons I'm supposed to press in order to get my camera to go and everything else. That horrible fear when you start these things, oh my gosh, that isn't working. So hi there, I'm Paul Cottington, and I have a fantastic job of being Head of Conservation Investment at the RSPB. And I see my role here on this event to be the advocate around nature. And so another part of that supply side of things, which Rohit was describing. I think the previous speakers gave an excellent overview of how they see nature markets developing. And actually have to say, please say that one of those people was a recent colleague of mine. So hi, Rohit. And actually an awful lot of the stuff that Helen was saying around the demand side of it really applies to how we would see what is needed for giving confidence from the supply side. So I'm not going to go into those bits now, and we can explore those in conversation around areas such as additionality, but areas you didn't cover, such as leakage, etc. So anyway, I just want to briefly look at what nature means in terms of investment, business, finance in our community. So Starter for 10 is around, hopefully, an awful lot of you have seen the Wild Isles series on BBC. And if you haven't, go onto iPlayer. Also, as a request, if you're a business and you would like to see some of the short business-focused films we produce, please get in contact, because they really are very helpful in terms of some of the asks, some of the things that can be done. I think what was really important about watching all of that was how it brought nature to life, and how David Attenborough managed to connect nature and make it important to all of us. So I suppose the start for 10 is going, standards are there as part of, well, for nature investment, and they must be there for nature. That is their purpose. So it's connecting investment in its various forms with nature, and I suppose to expand it out around climate. We're, the RSPB, have been looking at how we use conservation investment, and our way of looking at it is as an hourglass. So we see at the top having all the exciting opportunities from finance and what that can bring, and then all of these have got to flow down like sand to the bottom half, which is where all the projects sit. And this is where all the nature-based solutions are delivered. So what we want to see is where all of that finance flows down and delivers the nature and environment that we really need. And we do this because businesses and nature are reliant on all of this. However, to make it really work, what we've got to have is confidence. And I think, you know, from my previous role when I was working at the NFU, working with farmers, and now working within the conservation environmental sector, and then speaking with investors and buyers, it's that confidence that is really key, and that's what standards do. So it underpins all of our strategic approaches. We've got an awful lot of experience around this. So working in different markets, so developing carbon projects over in Sierra Leone and the Gola rainforest, through to doing debt using debt in order to do delivery for cell buntings, with developers, through to a big piece of work with the co-op on peatland restoration in Scotland and in Wales. So we can see how you've got to get these things right. But a crucial thing is, if you're doing it on a global scale and doing it in the UK, you've got to make sure you get these things fitting for each part of the UK. So my Scottish colleagues would always say, does it have a kilt on it? Okay, because one thing applicable to England doesn't necessarily work out there. So we really welcome the approach being taken BSI. It's much needed. I think the thing we would really say, and probably echoed by an awful lot of people in the audience and all the panel I expect as well, is we do need pace. And 3 years is an awful long time to do all of this. So somehow we've got to think about how we do it and maintain confidence, not only for 3 years, but as we move out of it. So I suppose for me, the proposition is around nature and how we get all of that.
Brilliant, thank you very much, Paul. Very good introduction. You've touched on a few sort of core themes there, which actually I'll probably be circling back to. You said probably not get into why this program is needed. Actually, it might be a good sort of starter for 10. I might start with Defra and then see who wants to jump in. So I suppose one for you, Helen E, just to make my life easy, 2 Helens. Why is this program needed, and what do we want the expected benefits to be?
Yes, yeah, Helen E and Helen A, a joint team today, aren't we? I mean, I think Lord Benyon actually set this out pretty well up front, and in fact, all of you actually in your presentations and intros have set this out as well. I mean, taking a step back, you know, our position really is we can really see the potential for markets to help drive that investment into nature's recovery, but they're very small scale at the moment. And what we hear is a lot of confusion, a lot of, you know, misunderstanding about what good looks like, and that is actually preventing these markets from scaling. And Rohit, you even mentioned in one of your principles, what we hear and what you hear all the time is we need standards, and we need government to come in and help with the shaping of, well, what do those standards look like? What does good look like? And that is what is a sort of an exceptionally strong catalyst to really help these markets develop with integrity. So that's come up time and time again in all of our different sort of presentations views. Integrity is really critical. If there is no integrity, there is no market. Nobody's going to invest in it if they think it isn't actually delivering those environmental services. And both the buyers of that want to get assurances on that, but also so do the sellers into the market. They want to know that what they are providing is actually delivering what it says on the tin. So both parties want to have that assurances. They want integrity, they want confidence. That word has come out again as well. And actually, you know, the BSI is the UK standards setter. So in terms of a partnership, is, you know, I can't think of a better one. I mean, I would say that, wouldn't I? Because we're working in partnership with it. But, you know, to your point as well, Paul, we do see this as a UK-wide endeavour. Because this point about interoperability, I think, is really important as well. And if we can get that right, then there's a huge potential to unlock these markets that do have that integrity, that do deliver that confidence, so that we can start to see that money flowing.
Yeah, it's very interesting, Taylor, to what you were saying, Paul. I don't know if anyone else wanted to sort of come in on that and why they feel this is needed and what the expected benefits are.
Nope. It's just a little bit. I think benefits for us are, you know, this is, you know, it's a nature investment market. We've really got to be about delivering for nature and climate. So we've got to be able to see those real actions and changes on the ground. So, you know, doing something like this hopefully means we've got a way of measuring what we're doing and being able to quantify what we're doing so everyone can check what is going on. Hopefully it can also build confidence. So you know, I've always looked at what it is to do this because it's one of the tools in the toolbox, yeah, it's not everything. And so it's about choices. So the more you can get this to be something people, and I'm saying, you know, or stakeholders in its wider sense, to have confidence and want to go for it, the more it will be a realistic choice, and therefore nature can be a realistic choice for, you know, kind of new markets and delivery.
Yes, no, absolutely.
Seb, I might just add, it's on a timing perspective, I just think this can't have come at a better time. And I know we'd all like it to have come sooner. We're all grateful it's here, because I think we're at this position now, especially after, you know, Montreal, you've got TNFD launching, got more and more projects going, you've got BNF, on the UK Nature Investment Strategy. And we're at a place where we've kind of escaped a lot of bad press. I know there has been some bad press, but we have escaped a lot, I think. And I think people are going to start asking the question more, are you actually delivering net positive? Is this just net, whatever we're doing bad over here? Who's actually making the money here? Is it legitimate? And how is it benefiting society? And I think those questions are going to come up more and more and more, and at least you can point to a body of work saying it's being tackled, and, you know, you've made very clear how much you're engaging with everyone around these topics. So I just think it's great timing. It's something to consider as well.
Yeah, no, I agree with that. And I think, you know, we had sort of COP26 was a lot of what, and we're really now getting into the how and starting to make all of this happen. So for me, yeah, I agree with you. I think it's excellent, excellent timing. I'll come back on timings, but there was one other thing that I wanted to sort of ask is, and I think Lord Benyon sort of sketched that out, and George, you touched upon that as well, but probably wanted to sort of talk a little bit more, because it is this sort of joyful balance of, you know, we want rigor, we want consistency, we also want to minimize burden on stakeholders. So keen to see who wants to sort of answer that. I know there's a number of sort of stakeholders that will have some thoughts on that. Paul, I think keen to sort of get your thoughts on this and see what the RSPB thinks, and keen to sort of see what the NFU thinks about this. But Paul, over to you.
I think in terms of getting the right back, I mean, rigor and consistency are key to anyone being involved in what you're doing, because otherwise, if you don't do the same thing, you know, if you can't show the same approach in different places, you'll get different results, and therefore, you know, it creates problems, and that's within all different codes. So having something that sits as guiding, I think, is really crucial. I'm not sure if burden is necessarily a way to look at it. It's I think it's getting the right thing that is usable on the ground, that is appropriate. There are an awful lot of different tools we need to be using through, you know, from government support through to regulations, and it's making sure that the tools that are used at different scales are appropriate and deliver. So I think it, you know, kind of burden gets removed as you make it applicable at the place of delivery.
Yes. Rohit, wondering if you have some thoughts on that. And you sketched it sort of out from an NFU/farmer's perspective. I thought that was really interesting. Do you have any thoughts on that? Because you very much get to some of the practical elements here. And you know, as you say, the NFU gets asked, how do we do this, and what does good look like? So yeah, keen to see if you have any thoughts.
Yeah, no, thanks, Eb. I think there's probably a couple of points. One is that I think one of the key concerns from the farming perspective is that any kind of requirements that are placed on these transactions will basically be enforced on the farmer. And, you know, the burden to report, the burden to provide the evidence, to deliver everything. And then, so there needs to be something within, you know, these standards that talks about how risk is shared equitably and what the responsibilities of the different counterparties are within this to make this work well. But also I think, and I think it really will be about the, you know, nature and delivering for nature in a high integrity way over time is going to require a more collaborative approach between buyers and sellers. It can't just be purely transactional, especially during this stage in the market where there's just so many uncertainties on what best practice looks like. I think that needs to be defined. But also, I guess going on from that, the standards need to allow room to evolve over time, you know, and really acknowledge the fact that we are at this early stage rather than trying to get to kind of perfect at day one. So effectively, you know, there's some really key things we do need to bottom out, you know, on things like permanence, additionality, and some of the key foundation aspects, but there needs to be enough space in there to allow best practice to evolve over time and to signpost on when this standard will be revisited and you know, ratcheted up over time as the market matures, and therefore you kind of spread out the so-called burden, you know, over time. And you can kind of tighten up some of the things as the evidence becomes more pronounced, you know. So as you say, what we don't want to do is kill off any innovation in this space on day one.
So can I just add to that?
Please jump in. That's what this is for. So please jump in if you want to. That's exactly what we encourage.
I mean, I think it's a really interesting discussion around the principles by which we want these standards to evolve, you know, that integrity, ease of transaction. And I think something that's coming out for me as well is just this point about transparency. You know, if everyone knows how to implement this, what's in place, that also can lead to then that price transparency, then that power dynamic between the buyers and sellers changes as well. You know, if everyone knows the rules of the game, what that price looks like, what they can expect to get for that, what other people are getting, then it just improves the dynamics of how this looks. And, you know, it delivers for the environment, but it also, in terms of the investor perspective and the seller perspective, they're getting the best money for what they're putting in place. So I think that transparency one is a really key one as well.
Yes. Helen A, did you have any sort of thoughts on this from a DFI point of view?
Yeah, only that I think to this point of word burden, I think lack of clarity is a burden, because you've got people putting projects together, they're investing in them, they don't know if they can sell them. You've got buyers who are sitting looking around saying, well, we're interested in buying, but we don't feel confident, so they go elsewhere. So I think that's all I'd say on that. And then on this, I mean, rigor, I think it's just the cost of doing business. And what we'd ultimately like is that it's built into the price of what's being sold. And that's really where we need to get to, because we don't want to diminish rigor. And yes, you know, we're going to have maybe more boots on the ground, and you know, so that's that point. And then I think it's just also just from an investor standpoint, having multiple different standards is not helpful, and that is a burden on an investor. So that move towards harmonization as well is important. So I think they're the only things like that. Yeah,
can I just build on Helen's point there? I think that rigor is really important, because effectively if we water them down massively to start with, just to, you know, reduce the burden, that they don't add much value, you'd still have all the uncertainty there and no one's going to really take them on. So it is really important that kind of version 1 kind of sets the tone of kind of getting some of that rigor in place and then building on it from there.
It's an interesting thing. Sorry, George, you're going to say something. You were going to say
no, I was just going to reflect, because it's such an interesting, you know, we've heard it a lot, and it's really interesting to hear what you're saying. And I think one of the things that's coming across is that we talk about this balance between high integrity and flexibility, or rigor and flex. And actually, they go hand in hand. That you can't have scale and growth without high integrity. And it's not, you know, it's you need the high integrity, and then what are the absolute minimums? How do we protect against the risk, and where can we cut complexity and provide simplicity for the market and reduce all these barriers without undermining, you know, these core integrity rules that we're setting? So it's sort of a balance, but it's also, you know, let's define what high integrity is. Let's make sure we're clear on the baseline, and then provide, you know, consistency, simplicity for the market. So it's really important factor that we're considering in our standards. And I mean, just to add on some of the points, we are thinking about a lot of things we could do here around pathway approaches, and define, you know, maybe we define this as what we understand where we are at the moment with the maturity of these markets, but look at what the future could look like, and therefore recognizing that these would, your point, I think, Rohit, about changing over time and building on our baseline at the moment, and also things like tiered approaches to recognize, okay, there's a level we have to set that reduces the risk, but also how do we recognize people who are overachieving and delivering best in class? So how do we build those into our standards? So a few things to throw out there.
To pick up on one of the points that Paul made earlier, apart from striking the balance between rigor and flexibility, there was also quite a lot of themes in these sort of pre-submitted questions on the pace, and I think Paul sort of alluded earlier to the pace. So George, apart from that sort of easy balance, you also need to sort of look at the pace of this. And considering you're at the front end, one of the questions was, you know, how many standards do you plan to develop? When are the first timelines of standards? What are the timelines of standards? When do you think the first standards are likely to be available? Can you give us a little bit more overview on sort of where you are and what you think? Because as we say, it's a 3-year program, but obviously trying to develop these standards at pace and getting consensus, it's a balance.
Yeah. So it's the work we're doing at the moment, to be honest, is with what we're calling our discovery phase, is really setting out which of the standards that we need to focus on, what's required for exactly what we've been talking about now, and where do we prioritize, and the prioritization will be very much around the risk of something not being in place at the moment. We're really considering that. So we're working through that. It's very difficult to say at the moment how many and put a number on things, because, you know, that's the nature of the discovery, and we're building in everyone's views. On the timing point, I did try to mention that, and Paul, we picked up, you know, we know that we can't wait 3 years. It's very clear on that, and we are, just reiterate what I was saying earlier, we will go down fast track routes. We know we need to get something in the next year that addresses this urgent gap and the key risks. So things like overarching integrity principles, which we've heard time and time again, you know, are needed, that don't exist at the moment, would do a lot to provide some clarity in these markets. We you know, that could be an area where we accelerate and try and get something done very quickly.
Brilliant, thank you very much for that, George. Some of the questions, no surprise to you, Rohit and Paul, look at, you know, what does this mean for farming? And so some people asked about what does this mean for regenerative agriculture? How will this meet the needs of stakeholders? So Paul, I know that you said you and Rohit were colleagues as well. So Rohit and Paul, wondering if you have any thoughts on these, on that question really, or on that theme.
Right, do you want to go?
Yeah, I can go first. Thanks. Yeah, I mean, I guess I kind of outlined it in my presentation, but I think the key thing was, I mean, I explored it in my first principle that if we can kind of move beyond some of the easier to do codes, you know, where you're looking at, say, woodland and peatland, where they're scalable fixed assets that, you know, you spare land for, and you can start getting into some of the more challenging areas such as soil carbon, hedgerows, agroforestry, then farmers are really in a space where they can start embedding these practices into their farming system, and that's really the gap at the moment, because we're not there. We're kind of effectively trying to incentivize farmers doing other things than farming, and where we want to get to is a place where this becomes just a part of the farm business model. So I think that's going to be the key thing. If we can find a way to kind of have the codes kind of set that baseline of what good looks like, whether it's land sparing or land sharing, and have a common language between the two, then farmers can start stacking and blending and structuring their land in a way that kind of works for optimizing food production and delivering for the environment.
Yeah, that is really interesting. Yeah, go on, sorry. I hadn't actually thought about it. Actually, the outcome would be to sort of completely, this becomes part of that business model for farming. So, that's, we talked about sort of how do you sort of talk about flexibility and all that. Actually, if this becomes just part of BAU eventually, then, that's the sort of aim achieved, really. And Paul.
Well, I think it comes back a little bit to what it is to have a choice. So one of the things is a land manager of all sorts. You'll need to look at what it is you want to be doing in terms of your own values and purpose and aspirations. And if you're looking at it financially, you'll have to balance that up against, are you doing farming? Are you going into an elm scheme? Should you be going into a carbon? Should you be going to a biodiversity net gain? What does that mean over time? So you need to be able to give people the right tools in order to make that choice. From a kind of wider perspective, and certainly as we would see it, we would be concerned about what it is to do leakage. So, what it is to reduce something here and then you increase it over there. So this happened in the Catskill Mountains over in the States, where they introduced these kind of trading schemes. So you've got to be aware of what you're doing. So you need a holistic system around it. And then also it would be, we've got to be very cautious around how we do things over time. So we would obviously push for having something as permanent, because we would like to see those changes to sit there, because it's kind of perverse to put all that good in and then to remove all of it. So there is a balance around how you do all of that. So I think the kind of conversation around how we look at where does something go, what do you displace, and then what happens? How long does it stay there? And permanence, having been in the NFU, is like, ooh, it's a difficult word to use, yeah. But then the other part is kind of getting down to the practicalities of it, and it's the hourglass thing, is going, investors want to see, or seem to want to see, agreements look in a certain way, yeah. Whereas when it comes to land management, the sort of agreements you have are different, yeah. So how, whether you have a leasehold or you have covenants or you have management agreements, how much access they have coming into it, I think are really important. So we've got to be able to balance everyone's expectations kind of on the top half of the hourglass and the bottom half as well.
Interesting, yes, no, it's a lot to sort of think through there. I'm also looking at some of the questions that come in via the chat. And I can see one here, so I have to sort of lean in. So a question for George. Great explanation, supports collaborative consensus building using industry experts. So does industry mean just private sector, or looking to include other key players, regulators, land management reps, government policy advisors, experts, etc.? I hope you can make sense of that question. What are your thoughts on that?
It's a really good clarification, actually, because I probably didn't mention it when I was talking about the engagement. So when we talk about industry, we are talking about everyone. So the people we have been speaking to, we've been speaking to suppliers, buyers, market infrastructure, codes, regulators, public sector, academia, and experts. So we're really building in as many views as we can at the moment, and during our standards and our process that we follow, we do the same. So we build across the landscape of stakeholders. It's a really good clarification.
I'll ask another one from the audience, which says, second question, high integrity means delivering what we are selling, but also must address the buyer side to ensure they are claiming use of the nature benefit appropriately. Will the nature market framework look at both supply and demand integrity? I don't know who wants to come in. I don't know if that's one for you, George, because you're quite close to some of that detail. Did you have any thoughts on that?
I can answer it, but it would be really interesting to hear the thoughts of the other panel members, because we've heard again a lot about this and a lot of learnings that if we want to create a framework that drives high integrity markets, we must look at the buyer side integrity as well. So we're thinking very carefully about how exactly we do that, how we link with other things that are going on. This is another point generally around the whole framework, how we link up with other initiatives, but particularly in here, and how we get that right in our framework. So I would actually be really interested to hear the panel's views.
Does anyone on the panel want to take that question, how we bring in the buyer side?
I can have a quick go. I mean, I don't have. Oh, sorry. Go on, Rohit.
No, go ahead, Helen. You're probably better placed to actually talk about this.
I don't have the solution, but I think it's absolutely imperative that we do have that buyer side. Otherwise, to the point, the whole thing gets greenwashed if you've got a buyer polluting over here and then doing something good over here. I think the TNFD will start to, the framework when it comes out, will start to help that a little bit, because it's going to list out all your positive impacts and your negative impacts. But I know that even at the moment, projects are saying, oh, well, if my buyer reports on carbon, its carbon footprint, then I tick them as a good buyer. And I was like, but carbon isn't nature. So it really needs to sort of delve a bit deeper into what do we mean when we say a buyer standard. So I'm all for buyer standards.
Helen, I can see you raised your physical hand.
Oh, I don't know where the virtual hand is in this.
No, I can't see them either.
I'm doing old school. So look, I fully agree with the question. I think that buyer side integrity is really key. You need to look at sort of across the accounting framework, as it were, in terms of damage and where the benefits are, especially when things are used for offsetting purposes. I mean, that's coming out really loud and clear, and the BCMI has obviously come out on that side as well. I mean, I think some of the other tools that we are looking at, Helen obviously mentioned the TNFD, the Task Force for Nature-Related Financial Disclosures, which will help both businesses and the financial institutions that are investing in them to have a much better understanding of those risks and impacts and dependencies. I think just some of the other tools that we have in place at the moment, so post COP26, when GFANZ was launched, the Glasgow Financial Sector Alliance for Net Zero, what then came underneath that is a transition plan task force, which is also starting to set out, well, what does a transition to net zero look like? How can we get assurances that that is a genuine pathway, that folks genuinely are moving towards net zero? So any residual emissions that are being claimed, there is that glide path. And we do now have a nature and an adaptation working group that is feeding into that transition plan task force. And it's back to what I was saying at the beginning about thinking about these sustainability issues in the round. You know, you want it to be net zero, but you also need it to be climate resilient, and you also need to be factoring in the nature into those transition plans.
Just adding, I mean, from how the RSPB sees this at an organisational level, we, I mean, buyer standards are absolutely crucial to what we do, and so we actually, as an organisation, have our own code of principles or code of practice and principles in terms of who we would work with and how we would work with them. And we go via an ethics board in order to help make some of those choices. And we would also have, I mean, to bring in all the acronyms, you know, things like SBTI, so science-based targets, and, you know, beyond value chain mitigation. So just making sure companies are doing as much as they can. So, you know, things are really valid. Because otherwise, you know, for us, this is about reputation as well. So we've got to make sure that we have confidence all the way through if it's going to last.
Yeah, just to echo that point, Paul, this is something we hear all the time from farmers. They're very concerned about who the buyers are going to be in this space, you know, and these are going to be long-term agreements, and they want to be comfortable that they're selling to people who have the right motivations. You know, again, it's about, if the buyer gets accused of greenwashing or doing something funny with buying these credits, that ultimately is going to flow through to the value achieved by the farmer who's delivering the credits in the first place. And yeah, so we do need to address both sides.
Yes, very interesting. I think one of the other themes that came through, Helen, there was a few questions around how does this work align with the Task Force on Nature-Related Financial Disclosures? Have you had any thoughts on that immediately? It's a tricky question, but have you any thoughts on that?
Hopefully it's not too tricky. I mean, Helen A might also have thoughts on this. I mean, ultimately, the TNFD is a risk management framework, right? It's helping those businesses better understand, as I said before, those risks and impacts and dependencies so that they can manage them. I mean, much like the TCFD framework, right? You need to really understand both those physical and those transition risks. And then obviously for the financial institutions who are investing them, they are going to be exposed to both of those physical and transition risks as well. So once they have a better appreciation of how those underlying ecosystems and natural capital assets are ultimately affecting their bottom line, then what are they going to do about it? You know, they're potentially, hopefully going to change the way in which they are investing. But also if they do want to make some kind of nature positive claim and movement, we want to be a nature positive business, and they have, you know, the information, data, tools to be able to move in that direction. And then you have your standards coming in through the British Standards Institution. If you want to buy a credit, then you are investing with integrity. So you do need to have a line of sight between these initiatives, but I would say they're very complementary.
Helen Avery, did you have any? Did you want to come in on that at all?
I mean, just briefly. So we're moving to a world where companies will be disclosing their nature-related impacts and dependencies, and they'll be trying to shift through their supply chains to reduce that impact. What we're not moving to is the world of restoration, and to Helen's point. And I think that's really where nature markets, if they're built with super high integrity, can really, especially on the biostandard side, can really play a role. And then, as I mentioned, so the TNFD in its latest iteration of the Beta 4 release of the framework, it talks about how companies will say what their positive impact will be, and that could be through restoration projects. So I think it's so important. There is going to be an overlap, but also just, we're building so much into nature at a fast pace because we want to beat the long time it took us on climate, that everyone's going to be working together. So it's taxonomy, it's TNFD, it's SBTN, it's ISSB, it's the individual national frameworks that are being developed in standards as well.
Fantastic, thank you very much. I'm being pushed here for time, so we're closing. We're getting to sort of the closing stage. I could talk about this for hours, but I was wondering if anyone had any sort of closing thoughts or closing remarks, anything that they wanted to share at all. The floor is yours. Nope. So no, in that case, I'm going to start closing the round table. So I think we'll sort of conclude it there. I hope that was insightful for the audience. I certainly learned a lot from our guest speaker, so I'd like to thank you all for a great session today. It's really been my pleasure to have you as part of our panel. I hope that this experience has been as rewarding for you as it has been for me. It's been really interesting to see your perspectives and see the different sort of things that come into play here. So that's been really, really useful. I also want to thank you, the audience, for your participation and your questions. We will follow up with all audience members with an email containing a recording of today's session and a quick feedback survey. We would really appreciate it if you could complete this. We have also recently launched a little book of biodiversity net gain, and we will include a link. I think we might put a link in the chat, and we will also provide a link in the email that we'll send out. We've also provided or will provide a link to the main webpage for the Nature Investment Standards programs. And I think that's all the information. If there's any other links that we need to share in this, we'll put a write-up in there and put that in the follow-up. So again, I want to thank our speakers and you, the audience, for your time today. Thank you very much.
Thank you.
Thank you all.